Good morning, Mitchell. All right, good morning, traders. Today is March 10th, 2025. Good morning to visitors and members. Today is an open house day. I'm starting the account with a new 27K open house account today. I already doubled the last one. Let's try and do it again. Thank you for being here. Hey, good morning, Greg. All right, so my SPY pivot this morning, 574.20. Above it, I'm a bull. Below it, I'm a bear. All of the Fab Five are in daily downtrends. All made lower highs and lower lows, closing under or near their, closing under their traps or near the 3 EMA. Also closing under the 17 EMA. SPY closed with a 2-hour uptrend and squeaked out a 10-minute uptrend as well. Gold and silver both in daily uptrends. Silver made a lower low and a lower high, closing over a bullish trap over the 17. Gold made an outside day. That's a higher high and a lower low, closing over the trap over the 17 EMA. USO in a daily downtrend made a higher low and a higher high, closing inside a bearish trap under the 17. UNG, quite the high flyer recently, made an outside day. Again, that's a higher high and a lower low, closing over a bullish trap over the 17. US dollar index still in a downtrend. We like that. Closed near the 103.80 area. SPY max pain for today, 577, with put to call ratio of about 1.25 puts to each call that expires today at 4:15. All right, let's go take a look at some charts this morning. First chart we'll look at SPY on the 10-minute chart. And as you can see here on the 10-minute chart, the 3 squeaked up over the 8 EMA at the last minute right there. It kind of popped underneath and then popped back up over there. So a 10-minute uptrend coming into the close on Friday. So we're looking for a green 10-minute candle over the pivot in order to play that for a bullish continuation. All right, so there's the 10-minute. Let's take a look at the 2-hour. 2-hour closed with, again, 2-hour just squeaked up over the 8 EMA here. So we got the 3 EMA just barely making it over. And we got a 2-hour uptrend. Actually, just kind of call it neutral, but you can see where we're opening up way down here. So there's SPY on the 2-hour uptrend, 10-minute uptrend. Not much of an uptrend, let me just say that. I mean, there's not very many candles to go with that uptrend, but there's SPY on the 2-hour and the 10-minute. On the daily chart, another lower high and a lower low, closing under the bearish trap. The 3 EMA is under the 8 EMA. All right, so closing under a bearish trap, under the falling 17. That's these red dots right through here. Under the falling 17 and under the all-time high anchored VWAP. If I set that up on there, that would be the all-time high. So we'd be under this pink line. That's the all-time high anchored VWAP. So there's SPY on the daily chart. Let's take a look at the game plan. All right, we'll take a peek at it on the 10-minute. Actually, we'll take a look at it on the 15-minute chart. Okay, so here on the 15-minute chart, we have, let's situate this all over again. Okay, move this over. Okay, so SPY pivot, 574.20. That's the yellow line. Okay, you got green erases red. So this pullback red from this location up here back down to this location. This would be green erases red up over 577.06. Don't think we're looking like we're going to be up there today. All right, on the low side, we got SPY breaking the lower side pivot. All right, well, the low side red erases green, and that's under 570.20. All right, so we're looking for a red candle to play to the downside to tackle these lows down here. We'll see what happens with the low side. Okay, so up over 577.06 is the bullish entry. Underneath 570.20, that's the bearish entry. All right, now if price happens to be in between here, all right, and we have a 10-minute, can't see the chart. You got it? Okay. All right. And we got a 10-minute uptrend that's breaking away from VWAP. All right. We will most likely trade that 10-minute uptrend that's breaking away from VWAP, or that 10-minute downtrend that is also breaking away from VWAP. Again, we would want clean candles on that, okay? We wouldn't want any candles attached to VWAP, and we probably want to see a break of a rubber band candle as well. So a 10-minute downtrend or a 10-minute uptrend, okay? 10-minute uptrend over VWAP, breaking the rubber band candle. 10-minute downtrend under VWAP, breaking the rubber band candle. Either one works. For today's options, we like 4 days till expiration or 11 days till expiration, $2 to $5 out of the money. Now, these are supposed to be Friday options. All right, so Friday options, 4 days. They should expire on Friday. Friday's got more open interest. That's why we choose Friday. We like $2 to $5 out of the money. Out of the money seems to be less expensive for us, so we give up a little bit of performance in order to lower our risk. And that's what we do when we do $2 to $5 out of the money. All right? So that's what we're looking at. That's the SPY game plan for this morning. All right? Let's take a look at the QQQ game plan. All right, here's QQQ game plan. QQQ pivot 490. All right, price action below 484.75. That's a bearish entry underneath there. Bullish entry up over 492.70. That's the bullish green erases red entry up there. Again, we like 4 days till expiration options, or 11 days till expiration option, Friday options, because they have more open interest. And then again, $2 to $5 out of the money. All right, you want something that's going to be a little bit less. It's going to be a little bit less risk, but you're not going to get the great performance you would if you had a 0 days till expiration option that was in the money. You'll get the best performance out of something like that, almost a 1-to-1 ratio as far as price action to whatever your option value will be at the time. All right, so we're going to take $2 to $5 out of the money. We're going to give up a little bit of that performance to gain to lower our risk. All right, so there's QQQ on the game plan. Let's take a look at QQQ on the daily chart. Let's take a look at it right here. QQQ, lower high, lower low, closing under the bearish trap. You can see the 3 EMA underneath the 8 EMA. So we got a bearish trap, closing under the trap, closing under the falling 17. That's the red dots right here, closing under the all-time high anchored VWAP. All right, so QQQ in a downtrend, kind of just neutral right here. Again, moving up, giving it up. All right, so it's just neutral. Head back over to SPY. Okay, again, moving up, giving it up. So just neutral right here at the midpoint area right here. Okay, so there's SPY on the daily chart. All right, just again, underneath the bearish trap, underneath the all-time high, underneath the 17 EMA, no longer in the upper third. So SPY just neutral, and in a downtrend because it's making a lower low. Here's a low, there's a low, there's a low, there's a low, making lower lows. Okay, so there's SPY. Let's take a look at FNGA. All right, FNGA, same deal. Everybody got the same candle today, yesterday on Friday. Okay, lower high, lower low, closing under the trap, under the 17 EMA, underneath the all-time high. This is the all-time high right here. Underneath the all-time high anchored VWAP. Okay, underneath the midpoint line. Again, moving up, giving it up. Okay, that's just neutral right there. So FNGA in neutral, just like SPY and QQQ. Let's take a look at IWM. All right, IWM, price action. Again, same deal. Lower high, lower low, closing under bearish trap. There's the 3 underneath the 8 EMA. That's a bearish trap. Okay, underneath the falling 17, that's the red dots right there. Okay, underneath this uptrend line, see the yellow line there? Underneath that uptrend line, underneath the all-time high anchored VWAP right here, that's the pink line right there underneath that. All the way down here in quadrant 1, so price action moving up, giving it up and more, that's bearish. All right, so that's in bearish territory right there. Okay, so there's IWM. On the daily charts, take a look at Diamond Dow, the last one of the Fab 5. Diamond Dow got a double top up here. See, you got a top here and a top here. Price action, same as everybody else, right? Lower high, lower low, closing. I'm just going to call it, that one's inside the trap, under the falling 17, under the pink line, that's the all-time high anchored VWAP, under the uptrend line, no longer in the upper third, so that's just neutral, all right? Moves up, gives it up, all right? So that's just neutral. You move up, you give it up, that's neutral. All right, when price action moves up and holds the higher ground, okay, that's when it's bullish. When price action moves up, holds the higher ground up there like that, see like it did here, a move up and hold the higher ground, that was looking good. That was bullish, all right? Then they started to give it up, so now they're just neutral, okay? They were bullish before, but not anymore because they're going up and they gave it up. They lost the upper third, which is right through here on the quad lines. This would be quadrant 2. This would be quadrant 3. This top one between the two green lines, quadrant 4. All right, price action, not moving up, just moving up and giving it up, so it's just neutral. All right, let's take a look at our technicals. All right, start off with T21.22. All right, T21.22. In order for T21.22 to be bullish today, we're going to need to see it make a higher low. All right, a higher low, not a lower low. It's got to be a higher low. All right, and then we want to see price action make a higher high, meaning I want to see a test of this midpoint. If we can't do that, chances are we're going to be bearish today, probably heading back into the sell zone or the oversold zone. All right, so you can see Friday, you can see we made equal high and then a higher low. See, here's a low, there's a low, makes a higher low, and with the higher low, they inked out a higher high right here on T21.22. All right, so if the bulls are still in town, we want to see another higher low and a higher high. So if we start making lower lows, you know the bulls left town. That's all there is to it. There's T21.22. Here's T21.23, putting in the V bottom on Friday. Price action coming down here and selling in the whole morning hour. Then after that late 2 martini lunch, the buying program came in, but they still couldn't close it over yesterday's close, over the previous day's close. So this is Thursday's close. This is Friday's price action right through here. They couldn't get up over Thursday's close. Not a good sign, not at all. All right, so tough day for T21.23. I don't even think they filled gap there on T21.23. Still caught underneath this falling 200 SMA there. All right, still got a bearish trap over here that hasn't been filled. All right, so this is looking pretty bearish right now. Okay, again, moving up, giving it up, that's neutral. All right, so that's T21.23 on the 15-minute chart. Let's take a look at it on the 3-bar chart. Okay, again, you can see same thing. Price action is just the same chart, different time frame. Okay, moving up, giving it up, that's neutral. All right, they're giving it up. They give it up and more, that's bearish. All right, putting in 3 more red candle bars, all right, on the 3-bar chart, okay, and finding themselves underneath this prior all-time high right here. If you zoom way out, you'll see that was a prior all-time high. See right there? Prior all-time high. Okay, so that was a prior all-time high. And you can see them coming back to that prior all-time high. Will they find support? Can they double bottom here and shoot back up and attack this 200 SMA? Well, we'll see, all right? It's going to take a whole lot to turn things around. We'll see what happens. That's T21.23. Again, that's the 3-bar chart. Okay, I zoomed way out so you could see the high way over to the left. You couldn't see it before. All right, but you can see it right here a little bit right there. A lot of wording in there. All right, you can see it right there. See it now? Prior all-time high. Okay, so price action pulling back to that prior all-time high. So that's T21.23. All right, let's go take a look at FNGA. All right, let's take a look at FNGA. Price action for FNGA, again, pretty much just like the rest of the market. The selling program began first thing out of the gate in the morning. Okay, then after the 2 martini lunch, okay, the buying program commenced. And you can see they could barely close over the previous day's close up here, all right? Barely close over. I don't even think they got it done. All right, so here's the close up here, 437.04, and it doesn't look like they closed over it because this looks like yesterday's close right there. All right, so unable to get that done. FNGA still caught underneath this falling 200 SMA. We're on a 15-minute chart. Still caught underneath this downtrend line. Still caught underneath this all-time high anchored VWAP. Again, price action moving up, giving it up. That's just neutral for FNGA. Now we follow FNGA. Why? Because, all right, it's got 10 of the most heavily weighted stocks in the QQQ, in the SPY. Okay, so wherever FNGA moves, all right, it's typically going to jerk the SPY and the QQQ along with it. All right, so we like to keep an eye on this. You got 500 stocks in the S&P 500, hence S&P 500. Okay, and then you've got about 20 big heavyweights, 10 really big heavyweights. Okay, when those 10 get to moving, I'm going to tell you, I mean, if they get to moving in a pack, it doesn't matter what the other 480 are doing. They could all be falling out of bed in the morning, okay? Those 10 can carry the weight and move the index higher. So we keep an eye on this FNGA because that pretty much dictates about 85-95% of the time direction for SPY and QQQ. Got to keep an eye on FNGA, all right? So there's our FNGA. Let's take a look at a few sectors this morning. First sector we're going to look at, let's take a look at XLE. That's our energy sector. All right, XLE, okay, looking at Friday's price action. Make sure I got the right day. Higher high, higher low, closing in a bearish trap under the 17, under the 12-month high anchored VWAP, okay, under downtrend line 1, under downtrend line 2, okay, underneath the midpoint. Okay, if this was our quad starting here at January, all right, you can see this is to be the midpoint, this dash line right through there. Okay, so not in the lower third, not in the upper third. It's just right here, meandering around back and forth over the midpoint. That's just neutral. Again, you move up and then you give it up. That's just neutral. Move up, give it up, neutral. Okay, so there's XLE. All right, nothing special happening there. You can see, gotta making a big habit out of moving up and just giving it up. Can't hold that higher ground. That's the key. You got to get price up, and you want to see price action hold up there. Okay, it's not able to do it, so it's just neutral. That's XLE. All right, so let's take a look at UNG because that's energy as well. Look at UNG. UNG is on a roll here. Look at this, making higher highs and higher lows, and higher highs and higher lows. Look at this, and new 12-month high right there. Okay, new 12-month high for that one on that red spike candle up into the sky there. Price action for Friday, okay, is an outside day. That's a higher high and a lower low, closing over the trap. Over, see the green dots? That's the rising 17 EMA. Up here in quadrant 4, hey, that's bullish up there. Look at them gap up here this morning. I mean, they're gapping right out of the quad lines. They're on fire. UNG. All right, literally, they're on fire. All right, let's take a look at USO. USO, quite the opposite here, okay? Got a higher low and a higher high, closing in a bearish trap underneath a falling 17. That's the red dots there, okay? Closing underneath the 3-year high anchored VWAP, okay? That's the post-COVID high right there, okay? 3-year high anchored VWAP. Closing underneath an uptrend line, underneath the midpoint, almost in the lower third, okay, darn near bearish here, but just neutral for right now. Again, you move up, you give it up, it's just neutral. All right, they start breaking into this lower third down here. All right, we're looking at something that's going to be bearish. There's USO. Let's take a look at some precious metals. Let's start off with GLD, another high flyer. Okay, GLD for Friday's price action. Let me make sure I got the right candle. Okay, another outside day, higher high, lower low. Closing, just going to call it over a bullish trap. So not a very big bullish trap, but bullish trap. Over the all-time high anchored VWAP. Over the rising 17. Up here in quadrant 4. That's bullish, GLD. See that? That's definitely bullish. I mean, they just made a new all-time high about a week and a half ago, right there. Let's take a look at SLV. Some silver. Okay, lower high, lower low, closing over the bullish trap, over the 17, over the 12-month high, 12-year high anchored VWAP right there. It's a 12-year high, not the all-time high. All-time high is like $48. Okay, so that's over the 12-month high anchored VWAP. Up here in the upper third, all right, so that's bullish up there. Okay, in the upper third, needed to hold the higher ground. All right, notice they couldn't hold the lower ground. Hey, that's a good sign. When you see them can't hold the lower ground, all right, in other words, moving down and giving it up, okay, that's a good sign. Back up into the upper third, that's bullish, up over the midpoint. Let's take a look at some semiconductors. All right, so let's take a look at SMH. All right, SMH, lower low, lower high, closing inside a bull and bearish trap, under the falling 17, that's the red dots. Okay, underneath the all-time high anchored VWAP, that's the pink line. Okay, darn near closing in the lower third, that would be bearish. Right now, just neutral. All right, so SMH neutral. All right, for right there. Not doing very good at holding neutral either. Let me just say that. Look how low. They even broke into quadrant 1. All right, that's bearish down there. Quadrant 1 in the lower third is considered bearish. Again, moving up, giving it up, and more. That's bearish. See it? See how many times they move up here? Almost about 11, 12 times. Okay, they can't hold it for more than 2 days, and then they give it up. They go up, and then they give it up. All right, that's just neutral. You go up and you give it up. That's just neutral. Okay, you can go up and give it up as many times as you want. Still neutral. All right, when you get up and you hold for 5, 6, 10 days, okay, now we're talking. All right, that's bullish. Okay, they see that they can't do that. They haven't been able to do that. It's not ready yet. That's SMH. Take a look at XLK. All right, XLK, technology sector. SMH is our semiconductor sector. Here's XLK. See, XLK was able to bring it up and hold it up here. Hence, they squeaked out a new all-time high about 20 days ago or 15 days ago. Anyways, price action yesterday, lower high, lower low, closing under bearish trap, under falling 17, underneath all-time high anchored VWAP, darn near breaking this uptrend line. See the spike? See that tail that comes down through it? Okay, closing in the bearish trap. Again, no longer bullish because they gave it up. Okay, see how they went up and then they gave it up and more. So they're back here in the neutral state. All right, that's XLK. Let's take a look at XLF. All right, XLF. Wow, XLF really took a dump here. All right, so look at this XLF. That's an all-time high right there. See that red candle that spikes the top of that green line? That's an all-time high. So that's an all-time high. Look at this. 1, 2, 3, 4, 5 trading days ago. So on Monday, XLF printed a new all-time high. All right, look where they are now. Anyways, lower high, lower low, under the trap, under the 17, under the all-time high anchored VWAP, barely hanging on to bullishness by closing in the upper third. Okay, barely. You can see that. All right, see that candle? Okay, you see all the tail on that candle? This is all about, if you're new here, your trading is going to be like almost 90% dependent on your ability to read candles and candles put together. All right, understanding that lower highs, lower lows is going to equate to a downtrend on some time frame. All right, it's going to be almost 90% dependent on your ability, almost 100% really, on your ability to read candles. Okay, now you notice the bears pushed it all the way down here, all right, on Friday, but look what the bulls did. Okay, they pushed it back way past the midpoint of this candle. So as far as control goes, all right, for Friday's price action, the bulls had more control. You see that? Because there's more tail than there is body and wick. All right, so the bulls pushed it way past the line of scrimmage and chased the quarterback down in the backfield. All right, you see that? So that's where the bulls dominated this candle. It's red, yes, okay, but look at the tail. The tail is way more than the body and wick combined. All right, so the bulls had control right there. So that's the bulls trying to rescue the price action right there. You can see they did They did a snap gap fill. Look at that. See that gap fill right there? See, there's a gap. They did a snap gap fill, and then there's a bounce right there. Bet you didn't see that. That open gap, filled the gap, and then cracked back up there to the upper third. So there's XLF on the daily chart. Hanging on to bullishness just barely, okay? Let me just say, at a point on Friday, they did lose it. All right, so there's XLF. Barely hanging on to bullishness. Barely, 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 all right? Let's take a look at IYT. This is our transports. All right, lower high, lower low, closing under a bearish trap. Inside the bearish trap. Under the 17 EMA. Under the all-time high anchored VWAP. Under the uptrend line. Just barely over the midpoint. Again, see this? They move up and they give it up. See? Move up and they give it up. That's just neutral. All right? You got to get up and you got to hold it up there. That tells me that investors and bulls are serious about holding the transports. And they're not. You can see we're underneath the pink line. That's the all-time high anchored VWAP. Underneath the uptrend line, barely hanging on to the midpoint. So that's just neutral right there. Okay, what we need to have a nice robust rally, okay? We like to see a falling dollar. Well, we got that. All right, we like to see transports in an uptrend. They're not, because here's a low and they made a lower low, so that's a downtrend, and they're under the trap, so transports aren't helping us out at all. We like to see financials in an uptrend. Now financials, here's a low. They made a lower low. They're in a downtrend. Okay, so they're not helping us out. All right, so financials aren't doing it. We need financials, transports, and technology and semiconductors. Okay, so SMH. Okay, SMH almost in the bearish territory down here. Okay, way making lower lows. Here's a low. They made a lower low, so they're not in an uptrend. Let's take a look at XLK, technology. Technology usually leads every rally. Almost every rally, technology leads it. Okay, here's a low, price making a lower low. That's a downtrend. Okay, see us closing underneath all of this. So nothing is working, all right, if you want to see a robust rally. It's not going to happen. Not for a while. We got to get everything moving in the other direction. Right now, the ship is pointed in the wrong direction for a robust rally. All right, we just don't have the ingredients to bake that cake. Okay, they're just not there right now. All right, we're all sitting in, most of them are all sitting in neutral territory, or you can see give it up in more bearish territory. Okay, so there's XLK. All right, let's go take a look at our economic package. All right, we'll run through it real quick. This is the US dollar. Now, the US dollar is doing the right thing, okay? Because when we got a cheap dollar, it makes our goods and services more affordable, all right, for foreign countries to buy our goods and services, because the conversion rate from their currency to ours won't cost them as much. See, if we got a strong dollar, it's going to cost them more of their currency to buy our product. Hence, they like to shop around. You know, they might be able to find the same thing, or maybe just a little bit less expensive from Mexico or China or Canada, somebody like that. Okay, so we don't want a strong dollar. We want a weak dollar. China's got like weak currency. Hence, they sell a lot of stuff. A lot of stuff gets produced in China and sold around the world because they got a cheap currency. All right? They wind up exporting a lot. They do really good business. All right? I don't know about the quality of their stuff, but as far as business goes, There's a lot of stuff that's produced in China and shipped around the globe. Hence, they do a lot of business. All right? We got a strong currency. Right now, we're in a downtrend. We like that, okay? Because it makes our goods and services more competitive. All right? So right now, what are we looking at? We're looking at lower highs and lower lows. And then we got another lower high and a lower low. And if we look over to the left, see these two peaks right here. Let me get the black flag out, the black one. Okay, so see these two peaks right here. Let's try it again. Right here and right here. Okay, that's minor support. See how we broke through minor support right there? Okay, that's a good thing. All right, and we're kind of breaking through some of the major support right there. Okay, that's dealing with some of the major support right there. So closing down here, break that low, break this low, close underneath it. Okay, that would be really good for the dollar. All right, that would be really good for the indexes. All right. Now a lot of the indexes made some real new all-time highs. All right. You guys know what caused all that new all-time highs that we saw in the indexes? That's going to come from inflation, all right? Because when you got inflation, that means everything costs more, all right? So when you got more revenue coming in, all right, because if everything costs more, all right, and demand hasn't changed, you're going to bring in more revenue. Now, if you've got good management, a lot of that revenue is going to transcend down to the bottom line, hence earnings per share. All right, and when you get higher earnings per share, all right, you get a better multiple. All right, you get a better price, so your stock is worth more. So if every stock in the S&P gets a little bit better multiple. Usually the better multiples come from the growth rate. The bigger price comes from just the bottom line, okay? But they like to see those earnings grow, all right, as well as the revenue grow. So a lot of that revenue came from growth in price, all right? And hence that's why we got a whole lot of new all-time highs in SPY and QQQ and FNGA or FNGU and Diamond Dow, okay? Got a lot of that. A lot of new all-time highs. Those all came from inflation. Okay, inflation hurts the consumer, but let me just say something. For the investor or the trader, it's a godsend, because that means, hey, there's going to be more revenue coming in. The price of my stock is probably going to rise. All right, that's what causes prices to rise, is either higher earnings or higher growth. Okay, but let me just say this, all right? We don't study fundamentals. Okay, we know what causes price to move. That's what I just explained. Okay, but we don't trade based on, oh, so-and-so is a good company. All right, we don't trade that. We trade the price. You can see somebody print like phenomenal numbers. Let's say like NVIDIA. All right, they got a 71% profit margin. That's huge. And the revenue they're taking in from AI, also huge. Where's NVIDIA today? It's not in an uptrend, I'll tell you that. Okay? So we trade price. It's okay to look at fundamentals, but we don't trade fundamentals. Okay? We might watch something to begin an uptrend by looking at the fundamentals and say, hey, I want some of this, but it ain't time yet, all right? not till it's moving in the other direction and pointed up. All right. So we're not going to trade something based on, oh, it's a good company. We're going to trade something on what direction is it headed into. Okay. We're trading direction. All right. Not the fundamentals. We're trading the price action, not the fundamentals. We don't care how good it is. If investors aren't buying it, all right, and institutions aren't buying it, we don't want to own it. All right? If they're dumping it, we don't want to own it. We want to buy something that institutions are buying because they're probably going to buy and hold for a little while. So we want to watch and see what the institutions buy. All right? And the way we figure that out is not by looking at the fundamentals, but by following the candlesticks and looking for moving averages that are pointed in the upward direction. All right? We don't trade fundamentals. We only trade price action. Okay? We never made any money off of trading the fundamentals. Now, you can make money trading off the fundamentals. You might have to wait 10 years. Okay? But it's much easier to make money trading the price action. All right? It's much quicker. It's more efficient. And it's a whole lot easier. All right? So we trade price action. This is the dollar. All right? You can see trying to break a little major support right there. All right? So let's take that off. Dollar's in a downtrend. We like it. All right? Back to, I got off on a rant there. All right? Sorry about that. Max pain for SPY today is 577. All right? Doesn't look like we're headed there. I think we're at 567 right now. All right? So max pain is 577. Doesn't look like we're going there. Put to call ratio is 1.25 puts for every call that expires today. Doesn't look like there's going to be a put squeeze or a short squeeze. And it doesn't look like we're going after max pain today. All right? I'm just saying that's what it looks like so far based on the price action this morning. Okay? On the economic calendar, what do we got for today? All right? We got PMI manufacturing final at 9:45. ISM manufacturing index at 10. All right? Construction spending at 10. All right? And that's pretty much it. Light day for today. Tomorrow, we got motor vehicle sales. Usually comes out at 7 o'clock. They didn't give us a time. Market focus, market reflections. Not sure when those want to come out. Treasury buyback announcement and a Fed speaker. So light day tomorrow. Okay, so light day today, light day tomorrow. Whatever direction we're moving in, it looks like probably have a continuation because there's really nothing here to stop price. On Wednesday, we got, I guess, more market focus. MBA mortgage applications at 7. ADP employment report. Okay, more non-farm payrolls. If we didn't get enough on Friday, we're going to get them again on Wednesday. PMI composite final. All right, 9:45. Factory orders at 10. ISM services index at 10. A petroleum report at 10:30. On Thursday, what do we have? Challenger job cut report, 7:30 in the morning. International trade in goods and services, 8:30. Jobless claims, 8:30. Productivity and cost, 8:30. Fed speaker, wholesale inventories, 10. A gas report, about 10:30 every Thursday. Petroleum reports, usually about 10:30 every Wednesday. Okay, other than that, light day there. Okay, and then we got Friday. What do we got here? China shifts monetary policy stance to moderately loose. Moderately loose. As opposed to what? Extremely loose? Just saying. All right? policymakers focused on separating the signal from
Hey, good morning,
noise.
everybody. How are we doing
All right,
out there?
so that's it. And then consumer credit.
Let's see. Oh, man. Hello, Tommy Santana. Hey, Stephen. William,
right.
Alan,
So
good
that's
morning to you. Joe, good morning. Ed, good morning. Lorraine.
All right, so I see I got a few questions. I'm going to make sure I get all my questions. You can see the chart now. That's good. John, questions? John, a question I have gotten: why do you cover all these different charts in my videos if I really only trade the SPY? Because everything has is usually a product within the SPY and helps to move it. I'm looking at last week's calendar. This is, yeah, I am. Let's go to this week's calendar. Okay, this week's calendar, light day for today. Tomorrow. Thanks, Lorraine. I didn't see that. NFIB Small Business Optimism Index, 6 o'clock. Jolts at 10 and a light day. Wednesday, CPI, 8:30. Probably want to be hedged before 8:30 on Wednesday. CPI report. Petroleum report at 10:30. Treasury statement at 2. Buyback at 2. Thursday, jobless claims 8:30. PPI final demand 8:30. Okay, natural gas report 10:30. The main event's going to be CPI 8:30 on Wednesday. Consumer sentiment at 10. All right, and let's take a look at the earnings calendar. All right, so really a light week except for the main event on Wednesday. On earnings, Oracle's going to report tonight. Okay, 422 billion. Everybody else is just some familiar names, but not going to move the markets. On Tuesday, tomorrow, all right, some more familiar names, but nothing that's going to move the markets, okay? Viking Holdings, Dick's Sporting Goods, again, familiar names, nothing that's going to move the markets. Wednesday, Adobe, 195 billion, probably not going to move the markets like the big boys do. Thursday, those are the headliners. More familiar names: Wheaton Precious Metals, Dollar General. Okay, nothing that's really going to move the markets there. Friday, nothing really big enough to move the markets there. On Monday, nothing really big enough to move the markets there. As far as earnings go, Oracle tonight, 422 billion, and then we got Adobe coming up on Wednesday in the evening. You can see right there, 195 billion. That's it. All right. So I look at everything because I want to know when things are going to be to have a robust rally. That's why I'm looking at everything else to see if there's any sign of a robust rally. Okay. All right. In case just in case you've got a sector that is working well. All right, you might want to hit the hamburger and look inside to see what's doing good inside that sector. All right, you might like something inside that sector that's doing well, that's helped carrying the sector along. So I look at the other sectors. I look at everything. Okay. Thank you, Lorraine. And yes, I did. Thank you, Ed. Yes, I agree with you. I am guilty of all of that. All right. I'm going to take a little break. I'm going to render my video. All right. I'm still here. I'm going to open up the markets with you guys. All right. At about 9:15, I'm coming in. All right. And we're going to look at SPY, see if we can find something that's going to work. Right now, I got to tell you, it looks like a total gap, huge gap down from 577 where we left off. Another $10 gap down day. Remember this day, $10 gap down. This day, looks like we're getting another $10 gap down. All right. So there's SPY on the daily chart. Let's take a look at it on the 10-minute time frame. And I'll take this off let me just get the right one. All right, there's our 10-minute time frame. That's the shaded section. That's the pre-market, post-market. Okay, there's our 10-minute time frame right there. All right, they squeaked out a higher high here, just barely. Question is, can they squeak out a higher low? Okay, they might be able to do it. We'll see what happens. All right, so there's SPY on the 10-minute. Okay, what we're looking for is a 10-minute downtrend that breaks away from VWAP. That's the burnt brown line. All right, or a 10-minute uptrend that breaks away from VWAP. That's the burnt brown line. Okay, either that or we head on over to the game plan and we're looking for red erases green or green erases red. I know it looks like there's a lot of lines on there. I can take a lot of them off. Let's just remove this. That's the low of day anchored VWAP. This is an uptrend line right there. Okay, so there it is. So there's the green entry, the red entry, and the pivot. Okay, and then this is the all-time high anchored VWAP. That's it. If you want to look at this without all that on there, there you go. Okay. All right, going to take a break. Okay, going to render my videos so everybody out there in digital land and cyber land can view my video. All right, so I'll be back in hopefully about 20-30 minutes.